Okay, let's talk about your income. Does it come from W-2 or self-employed work? Sometimes when you're self-employed, you get 1099s, and sometimes you get profit and loss statements and you get balance sheets and all of that as a self-employed borrower. So now one of the things that self-employed people have the ability to do is write off expenses. They write off and write off and write off, and they're pushing their income down as it applies to their tax returns. And it allows you, the lower you can show your income, the more expenses you have, it kind of helps you have a lower tax liability. And that's great when it comes to paying taxes, but it also can lower your income according to the mortgage loan originator and the loan processor and the underwriter. They can all look at your tax returns and say, oh, you wrote off so much, you don't show a lot of income. So that's why we sometimes have to pivot and switch. So when you're doing an application with me, let's figure out as early as possible. I'm sure if you're on video number 60 here or whatever this is, 50, you've probably already told me, but let's be as clear as we can that there's a difference between a W-2 employee and a self-employed borrower. And if you're in the middle of this loan process and you're working towards buying a house, don't change from W-2 to self-employed and think that nothing's going to change. It will make a difference in your ability to buy. And sometimes new self-employed people take 2 years before they can ever get ready to buy. So just be aware of the difference between self employed and W 2 borrowers.